Well, hello. Welcome back to Principles of Accounting 2. I'm still your host, Dr. B. We just got done talking about job order costing. And in job order costing, we talked about how we track direct materials, direct labor, factory overhead based off of each customer's order through what we call a job order. And we use job order cost sheets to do that. Now I want to talk about a concept called process costing. When we talked about job order costing, we gave the example of an auto manufacturer, Toyota, for example, making the Camry. That's job order costing. It's very specific to the customer's order. The types of products and businesses that use job order cost, they manufacture very specific products, low batches of the products. They're made to order, they're customizable, etc. That's job order costing. Process costing is significantly different. The types of companies, businesses that use process costing make the same product over and over and over again. They make thousands and millions of the same thing over and over without stopping. That's why we call it process. It's a continuous process. And the example I want to use, well, there's a couple different ones. Ice cream manufacturers. They keep making ice cream regardless of the customer's order. That's why every time you go to the grocery store, you see ice cream on the shelves. Water, bottles of water. They make billions of these things pretty much like every month, right? Billions, and the B's, right? Trillions even, a year, I'm sure. Trillions of bottles of water a year are manufactured. And these bottles, they're all the same. The water's the same. It's water, okay? It's they might there's different kinds of water, but it's all water. There's distilled water, there's bubbled water, there's mineral water, there's whatever, purified water, all different kinds of water. It's water, okay? But they make the same product. Millions and trillions of bottles of water. They use a process. It's called process costing. They take the purified water and they also have the bottle. They make the bottle with the plastic. So I would say 99% of the materials used here are plastic. The rest is water. Okay? They put the purified water in the bottle. First they make the bottle. Bottle moves down the conveyor belt. Water goes in the bottle. They put a cap on. And that moves down the belt. Conveyor belt ends up in a box. And the box goes on a crate, a pallet. That pallet goes to the grocery store. Okay? All of that's done without a customer even placing an order. Okay? It's automatic. It's a process. And so that's the difference between process costing and job order costing, which we just talked about. So let's jump into this discussion on process costing. So we talked about the differences. I'm going to spend some time talking about a concept called equivalent units of production, because process costing flows differently than job order costing does. And we'll also talk about similar concepts like materials, labor, factory overhead. We have already learned about, but I'm going to talk about how to apply direct materials, direct labor, factory overhead to process costing. So it's different. Process costing, it's the same product made over and over and over again. It's a low cost product. It probably costs, if I had to guess, a bottle of water, okay? It probably cost Nestle or whoever the hell made this water, it probably cost them maybe a fraction of a penny, maybe a penny to make one bottle of water. Maybe 2 pennies. Inflation. 3 pennies. Okay, you got me. 3 pennies. Inflation. So it cost them 3 cents to make this bottle of water, which is probably accurate. It's probably a little less than that, honestly. They make trillions of these things every year. Right? It only costs them a few pennies. They sell it to you for $1. It only costs them maybe 2 cents. Anyway, they mass produce these things. Trillions every year. It's the same damn product. It doesn't change. Hell, even the label's the same. Same thing. Now here's the thing. When they make all these bottles of water, it's almost impossible to directly trace all of the costs to a single bottle of water. That's why I can't tell you if it's 1 cent, 2 cents, 3 cents. I don't know. It's somewhere around there. But because they make trillions of these things every year, I can't directly trace all of the costs to this bottle of water. In process costing, they make trillions of these things. Okay? It's repetitive. The process is the same. We apply direct materials, direct labor, and factory overhead as the product, bottle of water, moves down the conveyor belt from one department to another. I apply direct material, direct labor, and factory overhead at each department or each stage. Let's say department just to keep it easy. Now think of it. The bottle of water. Think of a conveyor belt, okay? Conveyor belt starts and ends somewhere. It probably starts in a department we'll call the molding department. Molding. They're molding the bottles. Okay. The bottle, as you know, made of plastic. About 99.9% plastic, we'll say. And then there might be a little something else. I don't know. It's mostly plastic. So they create a mold and they pour whatever makes plastic, I don't know, some type of material, into this mold. The mold cools and it creates the bottle. Okay? So the first department is the molding department. And then the bottle moves down the conveyor belt. Moves to the next department. We're going to call that department the filling department. And they're filling the bottle with water. And then it moves to the third department. We're going to call that the packaging department, where they put the bottle into boxes. Okay. So 3 departments. We got molding, we got filling, and we got packaging. The bottle moves through those 3 departments. Within each department, you got new materials you're adding in. You got more direct labor you're adding in. And you also have factory overhead that you're adding in. For example, in the molding department, where they're creating the bottle, you got the material, the plastic. Okay. You also have labor. There's people that work in that department. And you have factory overhead. There's lights on in that department. Then the bottle, so already in that first department, I have some material, some labor, and some overhead. The bottle moves down to the second department, the filling department. I'm adding more material, the water, and the cap. I'm adding more labor, the people that work in the filling department. And I'm adding more overhead, the lights for the filling department. And then it moves to the third department, okay? The packaging department. I'm adding more material, the box. I'm adding more labor, people putting the bottles in boxes. And I'm adding more overhead, the lights for the packing department. You see, every time I added originally materials, labor, overhead. Then I added more materials, labor, overhead to the cost. And then I added more materials, labor, overhead to the cost by the time it becomes a finished good. So as you see, each process we're applying more materials, labor, and overhead at each stage as it moves toward the completion of being a finished bottle of water ready to be sold to a customer. That's process costing. We're adding more cost at each stage as it moves toward becoming a finished good, which is very different than job order costing. Job order costing, which we talked about earlier today in the previous recording. We take direct materials, direct labor, and factory overhead and allocate that to each job within work in process, which becomes a finished good, and then ultimately becomes a cost of goods sold. Direct material, direct labor, factory overhead can be traced directly to the job, the product, right? That's job order costing. Process order costing is different. In process order costing, I'm adding direct material, direct labor, factory overhead in each department as the product moves toward completion. So again, for example, I have my bottle of water. The first department is the molding department. They're pouring liquid plastic into the mold to create the plastic water bottle. Molding department, number one. And in that department, I added materials, plastic. I added labor, people using the mold. And I added overhead, the lights for that department. And then I did it again. The molded plastic empty water bottle, moving down the conveyor belt to the filling department, second department. Okay. This department, I'm adding more material, water, putting the water and the cap. I'm adding more direct labor. People are doing this activity. And I'm adding more overhead, the lights for the filling department. And then it moves down even further to the packing department, where they're putting the product into boxes. And then they're shipping it off as finished goods. But you see the difference. In process costing, I'm adding more direct materials, labor, and overhead at each department as it moves through the process. That's why we call it process costing. Make sense so far? Everyone's good with me? Pretty clear so far, yeah?
So far, so good.
Awesome. Thank you, Peter. Cool. Let's keep rocking and rolling. So, here's how I want you to think about this. As the bottle of water moves through those three departments, it's accumulating cost. Think of like a snowball. You throw a snowball down a mountain or down a hill, it gets bigger and bigger and bigger and bigger as it goes down the hill. Okay. Uh, as it's moving down the hill, it's accumulating more snow, more cost. Okay. Same concept. Same concept. This moves down the conveyor belt. It's adding more cost as it goes down the conveyor belt. I added material, I added labor, I added overhead, and I did it again. More material, more labor, more overhead. Then I did it again. More material, more labor, more overhead. And then it becomes finished good. Okay? So the same concept applies. Now, I need to follow the cost as it moves through those departments. I need to transfer the cost with that product as it moves through the departments. Okay. And I do that through a process, what we call transfer costs. Now, these represent the cost of the partially completed product. Now, when the bottle of water came out of the molding department, it's not done, right? I didn't put the water in yet. I didn't put the cap on yet. I didn't put it in a box yet. It's not done. Now, when it left the molding department and came into the filling department, it came in as a partially completed unit. It's not done. It's like 30% done. Okay? So I need to transfer those costs from the molding department to the filling department. And the way I do that is I debit work in process inventory dash filling department. I credit work in process inventory molding department. That represents the movement of the cost for the partially completed unit to the next department. And then I do the same thing again when it leaves the filling department to the packaging department. I add more, right? Because I'm adding more costs in that department. So I debit packaging department and I credit filling department, work in process inventory. And then when it's in the packaging department and it's packaged, so we put it into the box, we debit finished goods inventory and we credit packaging department, work in process. What that does is it shows the transfer of the partially completed units from one department to another, and then ultimately to the completed product stage, or also known as finished goods. Now, what I want you to pay attention to here is when I kept saying the word partially completed product, partially completed good, partially completed unit. Now remember, when this bottle of water left the molding department, it's a partially completed unit. It ain't done. It's partially completed. It's like 30% done. Because it only has just the plastic mold, just the plastic bottle. It got a little bit more done in the filling department, but it still ain't all the way done. All it did is got filled up and it got a cap on it. It hasn't made it to the packaging department yet. It only becomes done when it's packaged. And then it's sitting on a shelf, ready to be sold. But as you can see, it becomes partially completed when it's in work in process, as it's moving through the stages. Partially completed. So I want you to kind of understand that term, partially completed unit, because there are costs associated with a partially completed unit. We call these Equivalent units of production. Now here's the definition. Equivalent unit of production. It's the number of units that could have been started and completed during the accounting period given the costs incurred during the period. In other words, I could start and finish 1,000,000 water bottles during the accounting period. And I could assign cost of goods manufactured, materials, labor, factory overhead, to those water bottles during the accounting period. Those are my equivalent units of production. My equivalent units of production are assigned costs, materials, labor, and overhead. And the way that I do that is I take the number of units I expect to produce during the accounting period. I multiply that by the percentage complete for materials, labor, and overhead. So in this example, if I expect to complete 10,000 bottles of water, I expect to utilize 100% of my direct materials, my plastic. I also expect that I will use 20% of my direct labor as it's moving through the accounting period, as it's moving down through the process. And I also expect I will use 20% of my factory overhead as it's moving through the process for these 10,000 units. So I take to find the equivalent units of production, I take the number of units times the percentage complete. So 10,000 times 100% obviously is 10,000. 10%, I'm sorry, 10,000 times 20% for labor and overhead is 2,000 units. 10,000 times 20%, of course, is 2,000. So, and remember, for those of you who love percentages, it's 10,000 times 0.2, 0.2 to get 2,000. 0.2 is 20%. 10,000 times 0.2, 2,000. So 10,000 materials, 10,000 materials, 2,000 labor, 2,000 overhead. That's 14,000 equivalent units of production total. Now, as you're finding the equivalent units of production, we need to understand the unit measurement for the inventory. You probably remember this concept from Principles 1. In Principles 1, we talked about inventory, and we talked about how the inventory is assigned its cost. And you probably remember there's first in, first out, last in, first out, weighted average, and what's it called? Market, lower of market, lower something, lower cost of market, lower cost of market. So there's 4 methods. First in, first out, last in, first out, weighted average, and lower cost of market to find the cost of inventory, right? So we talked about that in Principles of Accounting 1. And when it comes to calculating the equivalent units of production, we look at two methods: weighted average and first in, first out. Now, as we're looking at the weighted average or first in, first out, we're looking at it with respect to the production activity. Now, here's how it works. So the weighted average first in, first out. I'm sorry, the concept. So for weighted average, there are 4 steps to using weighted average for identifying the equivalent units of production. The first thing you need to do is figure out the physical flow of the units. Physical flow of the units is the number of units, right? Bottles of water, flowing through the process. The molding department, to the filling department, to the packaging department, and then making its way to being a full unit, available for sale. So thinking about the physical flow of the unit, goes from one department to another. At the end of each accounting period, there's going to be a certain number of equivalent units. For example, at the end of, what month are we in, July? At the end of July, I'm going to have X number of units sitting in the molding department. At the end of July, I'm going to have X number of units sitting in the filling department. At the end of July, I'm going to have X number of units sitting in the packaging department, so forth and so on. That's the physical flow of units, but I'm going to have equivalent units, or partially completed units sitting in each department at the end of the month. Because remember, when it comes to process, it's continuous. It's the same product over and over again. Remember, they make trillions of these bottles of water every year. So going through the factory, at the end of each month, the accountants need to account for the partially completed units within each department to assign cost to that department. So, number one, follow the physical flow of units. How many units are in each department at the end of the month? Second step, compute the equivalent units of production using the formula. Okay. Third step, compute the cost per equivalent unit. What's the cost of an equivalent unit? And the fourth thing we do is assign and reconcile costs. All the factory overhead, all that junk. So step one, the physical flow. In my example, the one in my head with the water bottle, I got my molding department, my filling department, my packaging department. Okay? On a conveyor belt, goes through. Yeah. I also have my raw materials sitting in my storeroom. I also have front office for my employees, blah, blah, blah. And at the back of my shop, I have the loading dock where my finished units are being sent out on the truck. But this is the physical flow. Okay, this is a nice example of the physical flow. Now, using the weighted average method, I can compute the equivalent units. Now, remember, weighted average accounts for all of your purchases divided by, purchases divided by the number of purchases. Weighted average. That weighted average changes as more purchases come in uh, throughout the month or the accounting period. That's what you remember from Principles of Accounting 1 about weighted average. The same concept applies when it comes to finding the equivalent units of production. Now, here's how it works. We take the beginning balance, work in process inventory, plus the units we started the current accounting period with. That's the first thing we do. In this example, 120,000. I started March 31, 30,000, and then during the month of April, I started another 90,000. So 120,000 minus the units completed and transferred out in the month of April, 100,000. So in other words, I completed 100,000 units during the month of April. I transfer them out to finished goods inventory. So beginning balance plus units started during the month minus completed and transferred out during the month equals my ending work in process inventory. How much is still sitting in work in process at the end of April? 20,000 units. So we do that formula first to find ending work in process inventory. The next thing I do is I find my percentage of completion. At the beginning work in process inventory, I have 100% of my direct materials completed. Completed and transferred out, 100% of direct materials. My ending work in process inventory, 100% of my direct materials. And then I have what I call my conversion percentage. The conversion percentage is the amount of the inventory converted into the next department. That's why we call it percent conversion. Converted into the next department or next stage, whatever you want to call it. Next department, we'll say. Keep it easy. Percent conversion is the percent converted into the next department. Beginning process inventory, I converted 65% of the units. Complete and transferred out, 100%, because they're finished. Right? You can't convert. You convert 100% when it's completed. Right? 100% complete, converted 100% of it. And my ending work in process inventory was 25% converted to the next department. So it kind of shows you how conversion percentages work. Think of it like how much of that number of units is done in the molding department to be transferred to the filling department. That's a way of thinking about conversion percentage. How many of the units are done and being converted to the filling department? In other words, right? That's where that 25% comes from. Went from molding to the filling. 65% of it was moving from filling to packaging, for example. Just kind of help you to visualize. Okay, so we figured out the formula for ending work in process inventory. We figured out the percentage of completion for materials and conversion rates. Now, I take those costs to find my total production cost. Here's how it works. I add up my direct materials costs, 81,000. I add up my conversion costs, 108,900. You're probably wondering, how the heck did you find 108,900? So for work in process inventory, March 31, I got 65%. So 65%, that's how I find, of 120,000 units. 65% of 120,000 units, 108,900. 65% of 120,000 units, 108,900. So I add my direct materials cost plus my conversion cost to get 189,900. Then during the month of April, I have direct materials costs of 279,000. I have direct labor costs of 171,000. And then I have my factory overhead cost of 205,200. How I got 205,200? It's 120% of the direct labor amount. That's remember the fixed factory overhead rate that we talked about. Or the estimated factory overhead rate that we talked about. I add up my direct materials, direct labor, and factory overhead to get 655,200. I add my beginning work in process balance, 188,900, plus my cost during the month of April, 655,200, to get my total production cost of 845,100. Makes sense so far? I know conversion costs can be confusing. A lot of students get tripped up on conversion costs. You all still awake? I know it's boring.
Yeah, still good. Still
All right,
good.
cool. Thank you, Peter.
I'm still here.
Mike, you still with me? All right.
I would say
Okay, right on. Okay, cool. Uh, good. Yeah, because I know conversion costs, look, again, they can be really tricky. So that's why I'm kind of going slower here to make sure everyone gets it. Okay, so let's walk through the 4 steps for weighted average. Number 1, determine the physical flow. Beginning work in process inventory plus units started during the month, 120,000 units in this example. And then we have units completed and transferred out, 100,000. We got ending work in process inventory, because remember, it's beginning work in process plus units started during the period minus the units transferred out equals ending work in process inventory. That's the formula. We see that the two balance, right? When you rewrite the equation, the two balance. We can reconcile that the 120,000 units is accurate. Step 2, we compute the equivalent units of production. Here's the formula. Number of whole units completed and transferred to the next department plus the number of equivalent units ending in work in process inventory. Transferred to the next department or finished goods inventory. That's what you need to know about when it says to next department. Next department means But it can either go from molding to filling, or it can go from packaging to finished goods. Next department just means next department or finished goods. Okay, to find the equivalent units of production, we have the number of units times the percentage. In this example, 100%. To get for materials cost, which is the same for conversion, because I used all my materials. I completed and transferred out, which means I converted 100%. The equivalent units of production for direct materials. I got 20,000 units at 100% for direct materials. For my conversion costs, I got the 20,000 units times 25% conversion. Remember, that means I managed to get 25% of my equivalent units to the next department. 20,000 units times 25%, that's 5,000. My total direct materials equivalent units of production is 120,000. That matches up. Plus my conversion cost of 105,000 units of production. Step 3, compute the equivalent unit, cost per unit. Direct materials. Beginning of work in process inventory, I got 81,000. During the month, 279,000 additional. Give me total cost for direct materials, 360,000. Conversion, total cost of 485,100. I divide the total cost by the equivalent units of production that we got from step 1. 120,000 for materials, conversion 105,000. For direct materials, I have equivalent cost per unit of $3. And for the conversion costs, I have an equivalent cost per unit of $4.62. It's really all you need to remember from this part is just the formula, plugging in the values. Then we assign and reconcile cost. This is done by applying the direct materials and the direct labor, factory overhead, etc. To the cost. So costs for completed and transferred out for each department. I got direct materials conversion costs, giving me the total cost of units completed during the period for each department. And then, of course, I add in the ending work in process inventory, direct materials conversion costs to get the total cost accounted for. And then, of course, the last part is to summarize. We take the data, we go through the 4 steps. First step is identifying the information. Second step is computing the equivalent units of production. The third step is computing the cost per equivalent unit. And the fourth step is reconcile. This kind of summarizes what we just walked through. That's for the weighted average. Okay. This data represents the beginning work in process, the raw materials for the month, materials purchased for the month, materials used for the month. It also shows us the overhead, direct labor, indirect labor, and the other factory overhead. And using this data set, I can apply it to the costs. I can apply that data, those costs, to the process. Mike, good? When it comes to materials, uh, we record the transactions as adjusting entries at the end of each month. And it follows, again, if everything follows the physical flow, just as we talked about before. To increase our raw materials, when we purchase new materials, we debit raw materials inventory, increase it, and we credit accounts payable or cash if we use cash to pay for it. The second journal entry shows us when we are transferring the raw materials into the various departments. We debit the respective department, we credit raw materials inventory. The third transaction shows us the allocation of factory overhead used during the month. Yeah. Debit factory overhead, credit raw materials inventory. That indirect materials, of course. Similar process for labor. We debit work in process inventory to increase the work in process inventory for the labor amount used in each department for that department, right? So I used a certain amount of labor, direct labor for one department, or I use a certain amount of labor for another department, and I credit factory wages payable to represent the increase in the wages. For you see factory overhead in this next transaction for indirect labor. Remember, factory overhead is indirect materials, indirect labor, utilities, and other expenses. And then wages payable, credit cash to show us paying our employees. For factory overhead. Factory overhead, uh, again, these are the types of transactions you would see for factory overhead. Debit factory overhead, and we credit all of the various overhead accounts, prepaid insurance, utilities payable, cash, accumulated depreciation, whatever else. Usually a number of different things in there. And then we apply that factory overhead to our work in process inventory to increase the work in process and to decrease the factory overhead count. And then as we transfer from one department to another, we debit the department it's entering and we credit the department that it's leaving. When it's done, when we're done with the product, we debit finished goods inventory and we credit work in process, whatever the last department was. When we sell it, we debit cost of goods sold and we credit finished goods inventory. Process accounting, process cost accounting, there's a lot of different trends that are happening in the industry. These are really similar to what we talked about last week when we talked about the trends in managerial accounting. They're very similar in nature: robotic process automation, yield accounting, customer orientation, various services. All of these things utilize process costing in some way, shape, or form. It really depends on the type of company that we're utilizing, or the company that's utilizing process costing. Now, some companies might use both job order costing and process costing. We call this hybrid. Hybrid involves both job and process order costing. Uh, very rare circumstances. Usually big conglomerate companies like, and I can't think of one that would do it. Maybe, let's say General Motors, okay? General Motors, they make a lot of different cars, but they do it using, primarily, they do it using process costing. Why? Because they make a lot of the same car, same features, same everything, and they just roll it off the line. But they might also receive a customer order requesting a specialized type of vehicle. And so they probably use a hybrid form of costing. Just as an example. Not a whole lot of companies do it, but I'm sure there's quite a few out there that do. And you can do the same thing, I guess, for a number of different companies. Now I want to show you first in, first out. We talked about the weighted average. Now I got to talk about first in, first out. First in, first out, as you recall, is used by companies that receive the goods and then sell that same good first. Right? First in, first out. Most grocery stores use the first in, first out accounting method for their inventory. That's why when you go to the grocery store, first thing you see on the shelf is the oldest, is the unit expiring the soonest, right? That's what you see first. That's why you got to reach in the back for the stuff that goes, yeah. But that's the concept, first in, first out. That's why a lot of grocery stores use that method, because they're perishable products for the most part. So using the first in, first out method, we can allocate partially completed units or equivalent units of production very similarly the way we did with weighted average. Of course, the difference here is going to be the allocations for the conversions. So here's a subset of data for the month of April, very similar to what we saw earlier. The differences here that I want to point out relate to the percentage of conversion. So we still have the 120,000 units, but I want to show you how the first in, first out method applies to the units transferred. So we started the month with 30,000 units. I'm sorry, we started the month work in process, 30,000 units. We added an additional 90,000 for the 120. We transferred completed out 100,000 units. Within that 100,000 units, we started with the 30,000 and we started completed 70,000 of the 90. So that's 100,000. We ended the month with 20,000 units remaining. Second step, of course, is to compute the equivalent units of production. Now, here's where it's different. For direct materials, well, it's zero. The reason why it's zero is because we have the units for the beginning work in process, and we have higher conversion rates. And the reason for direct materials being 0% equivalent units of production is because of the conversion. And the conversion happening at the beginning work in process. So 0 for direct materials conversion, 35% up to 30,000, that's 10,500. Equivalent units started and completed during the month. Of the 100,000, we had completed 100,000. We began with 30,000 units, So 100 minus the 30 gives us 70,000 equivalent units of production. The equivalent units at the end of the period were 20,000 units. So direct materials left in work in process, 20,000 units. We converted 25% of that. So that's 5,000 units. Direct materials was 90,000. Converted units was 85,500. The third step, of course, is to compute the cost per equivalent unit. To do that, we take cost during the period divided by the equivalent units of production to get the cost per equivalent unit of production. So total cost divided by equivalent units of production from the previous step equals cost per equivalent unit. So direct materials, $3.10. Conversion cost, $4.40 per unit. Then, of course, we reconcile, just as we did before. Take the beginning work in process inventory plus our complete beginning work in process inventory plus our total cost of units finished and transferred during the period plus our cost of ending work in process inventory to equal the total cost accounted for. That's just a summary. And that, my friends, is a very lengthy conversation of equivalent units of production and the concept of process costing. Are there any lingering questions, comments, or concerns about process costing or job costing? Anything at all?
I'm sure there will be when the homework pops up.
Yeah, I don't doubt that, Peter. Yeah, especially now, just as you are working on the homework assignment for chapter 20 for process costing, I do want you to pay very particular attention to the equivalent units of production because that will be there. So just be very mindful of the formula. My recommendation, again, before you complete the homework assignment for chapter 20 or chapter 20 quiz rather, do this chapter 20 exercise. You'll find that cost per equivalent unit is there, equivalent units is there. I recommend those two. Okay, just download them and try them out. They're Excel documents, but when you plug in the values, it'll tell you right away if it's correct or not. Okay, again, accounting is a practice. We learn by doing, right? So give that a try before you do the quiz or the homework assignment, whatever. I promise it'll help. You'll definitely be able to remember how it works. That's why these exercises, I think they're of value for you to give it a try. Also remember, for every homework assignment and every quiz in this course, there are 2 attempts. The higher of the 2 attempts will be accepted into the gradebook. So if you try it once and you're not satisfied with your grade, make sure you try it a second time to try to earn a higher grade. And also it helps you to better remember and understand the concepts. Any other questions? Any questions, comments, concerns about anything? You all good? All right. Okay. So, all right, right on, Giovanni. Appreciate that. Okay, so if you need anything, you can always email me, call me, set up office hours, whatever you need. Okay. I always recommend email because I'm pretty quick to respond. Uh, you all know how I operate, so I'm pretty reachable. And of course, I'll be here for you anytime you need help. So, with that, as always, email me, call me, stop office hours, whatever you need, I'm here for you. If there's no other comments, questions, or concerns for this evening, I want to first and foremost thank all of you for being here. I sincerely appreciate your efforts. They are not going unnoticed. Uh, there's a lot of hard work in this course. There's two things going on every single week. So I need you to, make sure your stuff's on time, do your best to be here and show your effort. And I promise you, you'll do well as long as you try. Uh, the only way to fail this class is by not doing the work. I've said that before, even in Principles 1. The way to pass is to do the work. It's real easy. So, those are my tips for success. Try the exercises. Especially if you struggle with a concept, try the exercises. I promise you'll better understand them when you do. It helps. It really does. Okay, so as always, I want you to stay safe, wash your hands, do the right things. The next time we'll have class will be next Monday. The Now remember the way that I teach anyway. We have lectures on Mondays, except for last week, because last Monday was a holiday, so that's why we did it on Wednesday. But from today forward, it's on every Monday. So the next time I'll see you is next Monday. I want you to use the class time this coming Wednesday night to complete your homework assignment and your quiz. That time's for you to work on the course content. I'll post these videos uh, on my YouTube page, but also on the discussion forum. I'm sorry, the announcements. So the videos will be on the announcements and also on my YouTube page. So they're there for you to rewatch in case you missed the concept. But as always, I want you to stay safe, wash your hands, do the right things. I'll see you all again on Monday. Please make sure that your Chapter 19 homework and Chapter 20 quiz are done on time Sunday night. And I'll see you all again next time. Thank you all so much for your time today. Appreciate all of you. I'll see you all on Monday. Thank you so much. Bye bye.